In this video, we'll explore the source documents relating to credit transactions. First, we'll start with credit purchases. We are Funky Hair. Here we can see that Shine and Glow has issued this document to us, Funky Hair. We can also see that Shine and Glow has sold something to us. And therefore, from our perspective as Funky Hair, we have made a purchase from Shine and Glow. This source document is a purchase invoice, which verifies a credit purchase that we have made from Shine and Glow. This means that we buy now and pay later. There are some features on this source document that indicate that it's a credit purchase, where the invoice is issued by the supplier. This is not a cash purchase, where a cash receipt would have been issued by the supplier instead. So here are the features that indicate that it's a credit purchase. Firstly, we are given an invoice number. And secondly, we have credit terms given to us by the supplier. These two features tells us that this is a credit purchase from Shine and Glow. When a source document is issued, the original copy is always kept by the customer. So in this case, we are the customer, and therefore Funky Hair keeps the original copy of the invoice. The duplicate copy of the invoice is therefore kept by the seller, which in this case is Shine and Glow. We are Funky Hair, and from earlier, we have verified that we have made a purchase from Shine and Glow. We know that this is a credit purchase because we have been given the details of the invoice number as well as the credit terms. Therefore, we know that we are buying something now but paying later to Shine and Glow. Therefore, this is a credit purchase from the supplier Shine and Glow for 20 units of shampoo totaling to $450 plus GST. So how will Funky Hair treat Shine and Glow in its accounts? We know this is a credit purchase, which means that Funky Hair has bought something but will pay for it later. Therefore, this means that cash has not been paid to the supplier Shine and Glow. In other words, we owe Shine and Glow. Therefore, Funky Hair will treat Shine and Glow as an accounts payable, which is a liability in its accounts. Explain if the GST in this document is payable or refundable from the ATO. Because this is a GST paid as part of a purchase, it is therefore a GST refundable from the ATO, because the supplier would have forwarded the GST amount to the tax office on our behalf. When we recognize accounts payable in our accounts, at some point we know that there will be a payment to the accounts payable. Now we'll look at the source documents that can be used to verify this payment to accounts payable. So we are Funky Hair. Can you identify this document? Here's a little hint for you. It says here check number. Yes, this is a check but that verifies a cash payment that has been made. Can you describe this transaction? This is a cash payment to the accounts payable Shine and Glow for the amount owing from the earlier credit purchase of $495. Can you explain if there is any GST in this transaction? No, there is no GST in this transaction because it is not a purchase, nor is it a sale. It is only a payment to accounts payable Shine and Glow for the amount owed to the supplier. Now let us have a look at the source documents that verify credit sales. For this example, we are Funky Hair. And as we can see here, we, Funky Hair, have issued this document to the customer, W Nuptials. Therefore, we can see that we have made some sort of a sale or provided some sort of a service to the customer. This is a sales invoice. It verifies a credit sale that has been made. In other words, we have sold something now, but we expect to receive payment for it later. Some of the features on this document indicate that it's a credit sale and not a cash sale. Firstly, in the document, we are given an invoice number. And secondly, the credit terms that have been offered to the customer have been clearly stated. As mentioned earlier, this source document verifies a credit sale. We have made a credit sale to the customer, W nuptials for wash, cut and blow wave services provided, totaling to $720 plus GST. Again, we know that this is a credit sale and not a cash sale because the invoice number and credit terms have been clearly stated on the source document. Here's another quick recap on who keeps the original and who keeps the duplicate copy. In a transaction, the business will always issue the original document to the customer and the business will retain a duplicate copy. So, can you identify who keeps the original copy and who keeps the duplicate copy? The original copy is kept by the customer, that is W nuptials, and the duplicate copy is kept by the business, which is us, Funky Hair. So we know this is a credit sale. Let us recap what this means. Firstly, has a sale been made? And secondly, has cash been received from the customer? Yes, a sale has been made. The service has been provided to the customer. But no, the cash has not been received from the customer, W nuptials. So how then should we, Funky Hair, treat W nuptials in our accounts? Because this is a credit sale, a sale has been made but cash has not been received from our customer W nuptials. This means that W nuptials owes us. Therefore, we, Funky Hair, will treat W nuptials as an accounts receivable, which is an asset in our accounts. Can you explain if the GST in this document is payable or refundable from the ATO? This is GST received as part of a sale. As such, GST has been collected on behalf of the ATO. Therefore, it is a GST payable to the ATO. If we recognize an accounts receivable, therefore at some point in the future, the accounts receivable will also pay for the amount owed. Therefore, now we'll look at some source documents to verify the receipts from accounts receivable. For this example, we are still Funky Hair. And as we can see here, we, Funky Hair, have issued this document. And it shows that we have received from Perfect Weddings an amount of $2,000 for a progress payment on account. And we can see here that a receipt number has been provided. Therefore, this source document is a cash receipt. We now know that this is a cash receipt, and this verifies that cash has been received. In this case, we have received cash from an accounts receivable Perfect Weddings. And how do we know that Perfect Weddings was our accounts receivable? It's because on this document here, it has been indicated that the amount received was for progress payment on account. On account means that there was an amount owing. In this case specifically, it meant that Perfect Weddings owed us, Funky Hair. Now, can you explain if there is GST in this transaction? No, there is no GST because this is not a sale to a customer. It is only a receipt from the accounts receivable Perfect Weddings for amount owing by the customer.